Thank you, Gilbert, and thank you, everybody. Just before I start speaking about Galane, I am going to go into, I'll spend a minute or two on the current gold cycle. And I think it's very important to frame what we are doing at Galane and what the opportunity is ahead of us. In the platform that we've built with our existing assets. So there's a lot of information on this slide, but the key message here is that over the last 30, 40 years, more and more money has been spent on exploration, but less and less gold has been discovered. And if you look back 20 years and the last gold mining cycle, where it was 2002 to 2011 bull market, we entered that cycle with a huge pipeline of projects ready to be developed. And there were a few reasons for that. First of all, discoveries were made in the 80s and 90s, even the 1970s, that weren't developed. Because the price of gold was too low, technology was insufficient at the time, jurisdiction was bad. And 2002 came along, gold price started to go up, capital markets opened up to gold, and these projects got built. And unlike that cycle where we had that huge pipeline of existing projects and discoveries coming into it, we come into this one with very few discoveries, very few undeveloped tier one, very high quality projects by conventional measures. And there's a couple of very important observations from that. First of all, it's very bullish for gold because you don't have this huge inventory of projects. Yes, in the best of cases, it will take many years to bring them online, but they just don't exist this time around. And second, for gold companies looking to create value for shareholders and for themselves in this cycle, it's going to look a bit different. There's not going to be 10, 20, 30 different large open pit conventional mines to be built and shareholder value to be created. Those discoveries will be made, especially as gold price continues to move higher. But our view is that there's a lot of opportunity in taking existing infrastructure, existing deposits, and extending the life of them, extending the value of those resources, of those past investments. And in our mind, we can get a huge amount of leverage out of that. And I'll talk about how we've done it twice already and how we think we can do that in the future. So we do have two operating mines. One is in Botswana. We call that the Mupani Mine. That's been operating since 2005. We acquired it in 2011 from Gold. And the reason why they sold it was too small for them. They had grown a lot since they had developed that mine. And it was a perfect opportunity for us because we saw an opportunity to take what was at that point an end-of-life operation, transition it from an open pit mine to an underground, and dramatically extend the life of that operation. That infrastructure you see in that photo would be over $100 million to reproduce today. It would not be economic to do so for the size of the operation. However, basically inheriting that through the acquisition that we made, it's now an operation that contributes massively to our company, and we're able to leverage that past investment very effectively. Similarly, in South Africa, we acquired this one 5 years ago. It was a past producer, substantial infrastructure in place, and we've put in the money, we've put in the energy, we've put in the expertise to restart that operation. So we've produced a small amount of gold this year from that operation. By the end of the year, we're forecasting a total production of approximately 3,000 ounces from South Africa versus about 30,000 ounces from Botswana, total of 33,000 ounces. But that South African mine will ramp to a steady state average production of about 43,000 ounces. And I'll talk about that and what that means for our cash flows going forward. Just a few observations about our share price and our share structure. First thing to highlight on this slide, we are 56% owned by insiders and management. So that's the board, management, employees, and immediate family members. I think it goes without saying that this is a very unusual capital structure and shows that we are highly aligned with shareholder outcomes. There's nothing more important to us than the share price and value creation. I should say it's more the underlying value than the day-to-day share price. As long as we believe that we're creating value and adding to the company, the share price will go up and down in the short term, but we keep pushing that forward. The other two observations from this slide: first off, we have no warrants outstanding, so we don't have any substantial overhang on the stock. And second, if you look at where our stock was the last time gold was over $1,600, you see we're at 75 cents. While we've climbed quite a bit from our lows, we're still a long way from where we were back in 2013, despite the fact that we've made material progress on our Botswana operation. It's performing very well, and we added a new mine. So I think a lot of catch up yet to come with our share price. Just a couple quick comments on our Mupani Mine. So it is an underground operation, and I'll draw your attention to the graphic on the bottom right. And this shows the blue part, the open pit that was exhausted before we got there, that was mined out by IAMGOLD, and we transitioned this operation to underground. And you can see the deposit depicted in gold and where we've mined to date. We'll continue to mine from this operation, and we'll continue to extend the life and the usefulness of that infrastructure by exploiting other deposits that are around the greenstone belt that we substantially control all of in Botswana. We're the only gold miner in the country, and we hold virtually all of the land that could potentially host commercially viable gold deposits. So we think we'll be here for a very long time, and we'll continue to make very productive use of that existing infrastructure. Galaxy Gold Mines is the name of our South African operation, and this is quite a historic one. Production at this location commenced in the 1880s. Yes, 1880s. So it's got about a 140-year history. We acquired it out of a restructuring process about 5 years ago. It was on its way to going back into production about 10 years ago, but with the change in the gold cycle, the decline in gold price, and some issues with funding, it created an opportunity for us. A lot of synergy for us with this one. It's only a less than 10-hour drive from our mining operation in Botswana, so we're able to share a lot of resources. Very important for a small company like us. And I will highlight the resource here. So the graphic you're looking at shows a cross section. The red parts are the existing mineral resource. The gray parts are areas that have been historically mined out over the last 140 years. The red parts correspond to a resource we published in June, which is all categories, approximately 2.4 million ounces. We believe we can extend that substantially through exploration, and there's continuity in those ore bodies that are steeply plunging, and that's the gold and the yellow areas that we're showing in those ore bodies. So a lot of room for expansion for us on the resource. We are getting around to adding a drilling program to address that. But in the meantime, we are producing already. We've built a plant, or we've refurbished an existing plant, and we have a PEA, which we published in June, which shows us ramping up to an ultimate production level of 43,000 ounces a year at an all-in sustaining cost of just under $750 an ounce. Obviously, that is going to be hugely profitable for us at these gold prices, about $1,200 an ounce margin times 43,000 ounces times a very long potential mine life. That's $50 million US of pre-tax margin annually from this operation. So huge potential for us, and one that we commissioned off the back of our Botswana operation. Same team, same platform, and largely funded with the cash flows coming from Botswana, and therefore minimizing shareholder dilution. A recipe that we hope to replicate a few more times during the cycle. Again, a quick summary on the location of this gold mine. It is a prolific gold mining area. There's a very similar operation about 30 kilometers away from us, Pan African Resources. Last year, they produced almost 100,000 ounces from their operation, all in costs of $930, and a huge resource there as well. Very similar to us, but it's been mined in the modern era for another 10 plus years versus our operation. So it's more mature, but we think it's a good picture of where we will be in 5 to 10 years. Also, another one, perhaps an opportunity for us in the future, Vantage Goldfields. It has a resource of about 2 million ounces, also a short drive away. And that is another company currently in restructuring, so something that we follow closely. Just skipping right to our financial model, I think this is perhaps the most important thing to look at for us as a producer. As I mentioned, we're forecasting production of approximately 33,000 ounces this year. That has been reduced from where we thought we would be, primarily due to COVID. We have had some delays. We did have some downtime at both operations related to COVID, and we are continuing to operate with headcount restriction and, of course, typical protocols for operating in the COVID world, and that has reduced our throughput. But that gold's not going anywhere, and we've managed to continue to be very profitable even at the lower production rate with today's excellent gold prices. And you can see the forecast looking forward even to just 2021, where we deliver substantial operating cash flow. And this forecast is done using $1,600 gold. Really, it delivers a lot to the bottom line. And we have a net present value of our forecast cash flows of just under $300 million US, which is well over $1 a share. That compares to our current share price of about 25 cents. And again, that's at $1,600 gold. So we have huge upside using today's actual gold price, and of course, a lot of leverage to gold going forward at higher share prices. I think the other thing that this demonstrates here is just the potential of our platform. We've got a listing, we've got a management team that's built and commissioned 2 underground mines in the last 5 years in a very difficult environment from a gold price perspective for most of that time. And now we have free cash flow coming back to us as a company and an opportunity to potentially redeploy that into other opportunities where we believe we can add new mines with a similar strategy, exploiting existing infrastructure, using our own cash flow, using our own borrowing capacity, and adding production, adding reserves, and minimizing dilution to shareholders. Just quick observation on our management team. It's a very experienced management team, primarily from large African producers, and our CEO and CFO were from Glencore and Glencore affiliates. Our COO, Wayne Hatton-Jones, has now about 30 years experience mining all over the world and has held progressively senior operating roles at various companies. And we're a team that's fit to purpose. So this is a kind of team that you would put together to attack those kind of opportunities, underground, maybe complex metallurgy, and kind of unlock that value that we have done in our last 2 operations. With that, I'd love to turn it over to questions.
Thank you, Ravi. And the first question coming from Joe here early in the presentation, he said, any interest in working with Asian mining groups in your projects?
Yes, we always have interest, and I myself lived part of my life in Hong Kong and recently moved back to Canada. So I definitely have an affinity and a connection with Asia. The only thing my observation is on our existing projects, we're built, we're funded, and we're profitable. So we don't need any partners for anything. We wouldn't want any, but we definitely entertain it on new projects where perhaps the capital expenditure is too large for us to fund ourselves internally. We could look at a solution where we could fund construction or a build without diluting shareholders, but by partnering with somebody on the operating level.
Okay, good to know. So the second question coming from Frank from the other feeds, he's asking, are the management insiders planning to sell the shares to increase more on the public float? Because I think he realized a big percentage there on your holdings.
No, not at all. So we're a very tight team. Most of us have now worked together for 8+ years, and this is our main show for all of us. So I'm 44 years old, and I'd like to think I have 25 years of career ahead of me. So none of us have any time horizon for selling any shares. Realistically, if we grow the company, we will be issuing shares for acquisitions or for other purposes in the future, and the float will broaden. But for now, no intention or interest in selling any shares.
And another question coming from Gabe here, are labor relations an issue in working in South Africa?
To date, no. So we have a very small workforce and a highly mechanized operation. That's an entirely considered decision on our part. There are other opportunities in South Africa, huge resources, huge mines, but they also come with a huge workforce. And that's that style of mining and that style of operation is not something that we're currently interested in. So the short answer is yes, we have no issues, but part of that is because we have a very small workforce in a highly mechanized operation.
Okay, good. And another question coming from Max. Any acquisition targets in Botswana to increase the mine life?
We would love to find one in Botswana, but we are the only gold miner, and we already have all the territory. So we'll continue to replace ounces as we mine them, and we're highly confident in our ability to do that. We also have close to 200,000 ounces in our tailings. The mine's been operating for 15, almost 16 years now, and technologies have changed and the gold price has changed. At some point, we'll also go after those ounces, and it doesn't sound like a huge number, but that's material that's already mined. It's right next to our mill, and that one fine day when we go to recover it, that will be hugely profitable for us.
Okay, maybe one last question here. Combining two things together. Talk about your shares too. Was asking, will you consider rolling back your shares because you have a lot of shares, and then if you also consider giving out dividends as well?
So on the share rollback, we haven't currently considered that. I think some people have observed we do have a large share count. I think that's relative to early stage junior, but remembering that we're a producer with 2 mines, and next year, we should have well over 100 million US in revenue. Our share price and our market cap is small, but our actual company is not. And I don't think it's an inappropriate share count right now. And I currently don't think it would be beneficial for our share price to do a consolidation at this time.
Yes, thank you, Ravi, for answering all the questions, and believe it is a very much a very undervalued gold producer right now for the audience to consider.
Thank you.